Thanks for tuning in to the All Funds Network. Today we're here with Matteo Pandolfi and Bob Rutherford. Matteo is with Pareto, and Bob Rutherford is with Falcon X. So really excited to have you guys. Thank you guys for joining us.
Happy to be here.
Glad to be here, guys.
Awesome. Let's kick it off with quick introductions.
Yeah, sure. So, hello everyone, guys. I'm Matteo Pandolfi. I'm one of the founders of Pareto, which is an on-chain credit infrastructure protocol focused on enabling institutional lending. We recently rebranded from Idle Finance to Pareto, so some DeFi OGs might know from Pareto from Idle Finance. And we did this kind of rebranding to reflect our full commitment to solving what we believe one of the most underdeveloped problems in DeFi, institutional grade credit. So just to sum it up, Pareto goals is to build the foundational layer for programmable, transparent, and reputation-driven lending in crypto. Our system essentially enables institutional borrower to access create customizable credit through curated credit pools, where capital providers can allocate funds based on parameters that reflect essentially traditional underwriting logic, but enforced by smart contracts.
Very cool. Definitely dive into that. And then Bob, let's kick it off on your end as well. Tell us a little bit about yourself and Falcon X.
Yeah. Thanks again for having us. Super excited to be here. Falcon X is an institutional prime brokerage in the digital asset space. So we're essentially a one-stop shop for derivatives trading, spot liquidity, credit, market access. And we service some of the largest hedge funds, venture capital funds, treasuries, and other institutional players in the digital asset space. We've been around since 2018. I've been in the crypto space since 2016. So I founded a crypto custody platform in 2016 with a simple thesis, and one that sort of holds true to today at Falcon X, which is if this is an emerging asset class, institutions are going to trade it. And in order to trade it, they're going to need the tools that they're used to in order to meet their regulatory requirements. So we've really been the bridge, both here at Falcon X and my entire career, between traditional institutional sort of requirements in finance and digital assets and the emerging sort of DeFi landscape.
Nice.
Very cool.
Very cool. Awesome.
Awesome. Well, let's, I guess to dive into it, why don't we start with, kind of give us the lay of land. Maybe talk about how the, Matteo, the digital assets, kind of how is lending currently, or, kind of give us the history of lending in digital assets. Where did it start? Kind of take us to where we're at today.
So yeah, well, in terms of lending for digital assets, I would say, so we have been in the space since 2018, 2019. With Idle Finance especially, we started like building yield aggregators. So we have been touching a lot of the early lending protocols in DeFi. And, what we have seen since the beginning is that like lending application, credit application in DeFi started out as purely over collateralized lending, which makes totally sense in a completely anonymous environment, and allowed to create the first instance of interest rate markets, of money markets in DeFi. So that was kind of like the spark of what is going to be the broader credit market for digital assets. What we're seeing right now in terms of kind of trends, I would say, is that we see a meaningful shift in the institutional approach to digital asset markets. While the early DeFi wave, and I'm talking about, for example, 2020, 2021, was pretty much focused on, things like yield farming, liquidity mining, pretty much, speculative activity, which brought a lot of growth. The narrative I see right now is shifting towards capital efficiency, sustainability, for example, and, also automation, thanks to this kind of on-chain infrastructure. And what I see also is that at the same time, if you look at macroeconomic conditions. These conditions have created a strong demand for stable yield and operational leverage. Capital allocators want real underwriting frameworks. Borrowers want flexible, reliable sources of liquidity. So what I saw and the evolution that I saw over the last 6-7 years in DeFi is that tokenizations and credit are now seen as core building blocks of the digital financial infrastructure. You can see that from recent reports. Right? One that comes to my mind right off the bat is a McKinsey report that suggests that tokenizing assets and credit flows can unlock trillions in efficiency gains actually for the digital markets. But to get there, we need programmable, trusted systems that bring the advantage of DeFi, like transparency, automation, real-time settlement, to the traditional lending markets. So, yeah, from an environment that was purely tech savvy and really focused on over collateralization, the money markets and the credit markets in general, I see that is shifting towards a more traditional approach by still bringing all the advantages of on-chain infrastructure.
Yeah, very interesting.
No
Bob,
worries.
from your side of the coin, from your lens, from FalconX's point of view, maybe give kind of thoughts and insights to what you've seen back historically and then current state.
Yeah, I mean, I think the first place when we start thinking about what's unique in sort of the historical context of credit in DeFi and in crypto is some of the uniquenesses, right? It's like crypto is a bearer instrument at the end of the day, and it has no sort of tie to some of the repercussions that you would see in the lending space, the credit space, in the real world. And those unique characteristics of our industry, right, of this asset class, have made credit a little different, a little bit more inefficient, right? So when you're dealing with a bearer instrument and you need to securitize or collateralize your loan, you have to over collateralize it. And financing is the lifeblood of a lot of modern finance. It's the thing that makes the world go round. And if ultimately at the end of the day, we have this inefficient market, obviously it's going to hamper the growth of the industry as a whole, right? And that's really what we're trying to solve. We're trying to bridge that traditional finance, the way modern finance works globally around the world, right? And that's what FalconX brings to this new sort of product partnership with Pareto in the DeFi space, right? And so this is really what we think is one of the first and potentially probably going to be one of the more successful areas where we see this as the first step in real world assets, right? We are tokenizing real world assets here. These are, this is a structured credit facility similar to ABSs or MBSs that people see in the real world, or in traditional finance, I should say. And that's a $13 trillion industry, right? When you say why does DeFi or why does the sort of crypto credit industry need institutional credit? Well, the scale of the credit industry in traditional finance is only going to help sort of accomplish a lot of the sort of forward-looking technological advances that we're hoping to make in the blockchain and crypto space. So this is really a first step in solving what is a big problem, a foundational, fundamental problem, or at least a hurdle for our industry. And we're really happy to be one of the first people to put this out there on chain.
Very cool. So, Matteo, how has you talked about kind of the history in terms of in the past, everything was kind of over collateralized. Talk about the transition that's taking place today. What does it look like right now?
I would say that the transition to from the purely over collateralization lending facilities to more structured credit facility is about unlocking collaterals that are not digital native, in the sense that what also Bob mentioned is that we are missing out on a 13 trillion market just because we are restricting the kind of collateral that can be used for these kind of credit facilities to digital only collaterals. And as we are going towards a more real world asset approach to DeFi, I see that like the transition is about unlocking new kind of collateral that would unlock also more growth on the credit markets. And credit in DeFi right now is still underdeveloped market, I would say. There are some missing primitives that we still need to complete and develop completely. Like, for example, verifiable identity, enforceable obligations, for example, or scalable reputation. In traditional finance, you can lend based on a borrower's credit history or borrower's cash flows or audited financials. Those are the kind of collaterals that we need to onboard in DeFi as well. And so, we would need to transition to a purely digital asset backed leverage as a way of lending to a more credit based kind of lending, is also in DeFi. The result is a market like in the past, the result was that this kind of market was excluding the majority of productive borrowers. Firms that have strong fundamentals but don't want to inefficiently lock up capital, for example. So in my opinion, if DeFi is going to serve the global economy, we need to build systems that approximate trust and reputation, that allows trust and reputation, but do so in a decentralized, transparent, and programmable way.
Where do you guys see, obviously there's technology rails that need to be kind of fully developed in certain cases. You guys have a strong leg ahead of everyone else, it sounds like. But what was the next step for adoption where off-chain players need to move on-chain? What's like what are you seeing maybe as trends as maybe a first step?
I think we can talk a little bit about what we're seeing in the space, especially with regard to this structured credit facility. We've long taken the stance that in order to progress the industry, we sort of have to meet the rest of finance where it is, right? You can't build something and then hope that they're going to adopt it just because it's a great piece of technology. That's not usually a recipe for success. And this is an example where, when you look at private credit funds, for instance, right? They're agnostic as to the technology in many ways. Like, a lot of us are here because we love this space. We believe in the future of the technology. The rest of the world doesn't necessarily work that way. They're certainly intrigued by it, but at the end of the day, they've got a job to do. And so this structured credit facility, which is a first step towards doing that, is really about meeting them where they are, right? Bringing them a product that they actually recognize, bringing them all of the sort of contractual terms and obligations and things that not only do they recognize, but are requirements at their firm, right? The sort of FalconX plays that role of bridging this gap. We are the sort of administrator. We're sort of managing the collateral, et cetera, sort of running this asset and allowing them to do the due diligence, providing them the portfolio statistics, the risk metrics, the performance metrics, all of the things that they're just used to seeing in their world that they need to get through their due diligence, their compliance, their legal programs. Like, as much as we don't like to talk about them, these are real requirements at large billion-dollar multinational funds, right? And so the reason I give all of this example is to say, now they have something that they can actually consume and react to. Like, they might have been intrigued or been curious by DeFi in the past, but this is a real asset that they recognize that fits in their portfolio, right? Like, it has a purpose in their portfolio that matches their strategy. And I think this is sort of when we talk about trends in the industry, people who we've had conversations with on a number of topics for a long time, now all of a sudden, their securitized credit team, who didn't really have anything to really talk about in DeFi or really react to, now we're having these conversations with, billion-dollar multinational private credit funds. And we've got a pipeline well into the 9 figures post this pilot with Pareto. That's a big trend. And it dovetails with a couple of other really big macroeconomic trends and global, global political trends, right? Which is majority of the sort of G7, G20 countries, wherever you want to sort of pull there, they have fit for purpose regulation, right? Think of the Singapores and Europes and the UK coming up slowly. The US now is sort of poised and on the precipice of doing the same. All of a sudden you see traditional financial institutions being like, well, how do I get into this space? Like, where do I fit in? How do I play? You've already seen a number of traditional finance players in Europe jump on the Mika bandwagon, BBVA, Standard Chartered, Deutsche Börse, right? As we said earlier, securitized assets is 13 trillion, structured credits 2.5 or 3 trillion. These fit right in their wheelhouse. Now all of a sudden the gates are sort of opening and everybody's looking for their opportunities. And these are like really easy, high quality assets that they can come in and get a win on because, they know how to deal with them. They know how to handle them. And we've bridged the DeFi sort of chasm for them.
So kind of two questions on that. So how, I guess, talk to us about the benefits of bringing this traditional world into the crypto space.
The benefits of bringing them into like this product in particular is similar to what we talk about, the benefits of blockchains and its entirety in the industry. Like we live in a global world, a 24/7 financial world, right? And that's not from crypto. That's just geopolitics. That's the way that the world is matured. And the infrastructure that we operate on in finance, it's not 24/7. It is not global. It's probably cheaper for me to load $1 million on an airplane and ship it to Japan. I'll probably get there faster and cheaper than if I tried to send it via Swift. Not to make anyone mad at the bank's wire rooms, but that's just a fact. And so you think about the turnover, how quickly we invest money, how quickly we can move it around the world, the efficiencies we're going to gain operating 24/7, the transparency and trust. Ultimately, blockchains work as a form of trust. Like that's all that it does at the end of the day, right? Just give people who don't know each other, don't trust each other, a form of trust in order to deal with one another. And then you just apply that to sort of asset-backed securities or structured credits more specifically. That's what we're doing. And it takes our ops team here at FalconX a couple hours, and I think that's being generous, maybe an hour or two a month to sort of set up the facility, move it on chain, move the tokens, move the interest payments, do all of the verifications, sign off. We get the benefit of multi-sig and multi-party computation. It fits in with our infrastructure. The assets themselves, when you think about sort of looking through into what a pool of assets that's been securitized is going to be, we've moved that all on chain. We provide the reports, we provide the transfers and the links. We know what that portfolio is made up of. We know the quality of the lenders in that portfolio. We know the assets that are being held in collateral against the loans in that portfolio, right? This level of transparency, of speed, of sort of borderless finance, it's quite powerful, really, when you think about it, about the potential here. And that's really what we're doing.
So yeah, so if I could summarize that, I guess the three biggest advantages would kind of be speed, transparency, trust, and then kind of I would say maybe the unique feature is instead of having an over collateralized loan, you guys are kind of looking at what their wallets maybe have on chain as kind of collateral, but they don't necessarily need to over collateralize that loan. Is that a correct statement?
The loan itself is still over collateralized on the FalconX side. So to clarify that. But the manner in which the leverage is given to the clients is one in which they post, say you come in, you post $2, and I'm going to give you $5 worth of credit on my platform. So you're trading on my platform, you have $5 of purchasing power, traditional margin trading structure, right? But within the walls of FalconX, we have all of those assets still over collateralized. And now what we're doing is taking that loan, we're selling the participation rights via structured credit facility to lenders, and given the risk profile, the returns are very attractive, and now we can scale that credit facility, right? And this is where we talk about the oil that sort of fuels the engine of finance, right? Now we can recycle that cash. We've had people who are willing to buy all of those sort of margin loans, those credit facilities here. We're keeping everyone safe because it's still over collateralized, providing the reporting, the nature of the facility. And now we can, sort of sell those participation rights, bring in cash, and extend more credit to our clients, right? And so everybody gets the benefit of, we're still over collateralized and protected, but our client gets the benefit of leverage. The lenders in the pool get the benefit of the yields, but they remain protected and they don't have to deal with all the on-chain stuff. And, sort of everyone wins, right? It's the sort of ultimate goal at the end of the day.
Yeah. Bob, you said something earlier. I was just going to maybe highlight that was important. You kind of mentioned that it takes maybe a couple hours tops. You're being generous there to go through the process. For folks who maybe don't really realize what the past process was, can you kind of highlight maybe how much time it would take in the traditional sense to do something like that versus what it is now?
I'll be honest with you. I've never sat in the ops room of an ABS or structured credit facility. But you can imagine just the legal documentation, the wire setups, the flow of funds. Think about all we can do with smart contracts from a programmability perspective. Like these are just, it's the same process by design at the end of every month and the beginning of every month in order to set up the facility or roll it. The Pareto team's done a great job working with us to sort of define what that needs to be according to all the legal agreements, right? That's sort of bridging the real world and the on-chain world. And then with our wallet infrastructure and Pareto smart contract infrastructure, once we have that all set up, it's sort of set it and forget it. We just need to confirm all of the assets, confirm the transfers, set the rate for the next month. Everybody opts in. You're really talking about taking dozens of people and, each probably spending a couple hours, a day or a week doing all of these things. And we've reduced it down to a few simple steps that are incredibly secure.
Right. Yeah, which has been very painful for everybody. Even to your point earlier, when everybody was freaking out about T+1, going to T+1, how crazy that was,
Yeah.
Just goes to show how behind of the times traditional finance is.
Absolutely.
Yeah. I guess, Matteo, from your lens, kind of what are you seeing, with the process? Obviously, you both are front and center in this, which is amazing. What's the education process? Obviously, Bob, you said, meeting people where they're at, which I think is very important today. Matteo, what do you see that on your side, conversations and the folks and firms you're having discussions with?
So in terms of the conversation that we're having, yeah, we see that on the institutional side that there's huge, substantial interest in this kind of credit facility for all the advantages that also Bob mentioned. So this kind of, programmability, real-time programmable interest flows or cash flows, trustless settlement and liquidation logic, for example, or transparent even borrower performance history. So definitely in the conversation, there is interest in terms of education. Yeah, I think that the heavy lift here, most of the work that we have been doing in the past, also with FalconX, with the alpha of FalconX, was on the more on the legal side in terms of adaptability to the smart contract infrastructure. You need to reflect how the legal agreement works in terms of on-chain logics. And you kind of also do the opposite as well, in the sense that for probably the first time in my career, I've seen legals trying to really grasp how a smart contract is working, what are the logic behind, what is enforceable, what is not enforceable, what is customizable, what is not customizable, just to be able to replicate it in the right way on the legal side. So I think that there's still some education that we need to do in order to be more scalable, I would say. But I've gladly seen a lot of openness and flexibility on both sides to create this kind of intersection between traditional credit agreements and on-chain credit infrastructure. So I think that the conversation is pretty much on, enabling and scaling up these credit facilities to be able to replicate legal agreements that are off-chain. And in terms of the conversation and the next steps, I would say also in terms of kind of filling the gap with what we have in traditional finance, I think that there's a lot of work that we can do on, kind of risk scoring, credit events, for example, and standardized reporting also for these kind of on-chain credit facilities. One of the things that we're thinking a lot at Pareto is around creating tools to preserve privacy without sacrificing trust. This is also, we can open a big parenthesis about like ZK technology, zero knowledge technology, but at a high level, essentially, we want to allow borrowers to prove their great credit worthiness without revealing sensitive data. And by doing that, we can definitely unlock a critical building block for on-chain credit facilities. So one of the conversations that we're having is also towards this kind of topic where we allow credit worthiness to create an on-chain credit score without sacrificing privacy, essentially.
Yeah, that's a really interesting point. How do the lenders feel about that, or even the borrowers, like in terms of like the credit scores? Like, how could you? I don't know how to ask this. How do they trust it? When it's like technically anonymous.
Yeah, so if it's completely anonymous, of course, you need to build either like a strong credit scoring system, but it's kind of not really a silver bullet for completely anonymous credit facilities. That's why we believe that still you need to create an identity layer for these kind of credit facilities. So it really depends on the borrower profile, in the sense that with FalconX lenders, they look at the collateral base that they have, all the work that they do on the prime brokerage activity that they have, and this is kind of what giving the credit worthiness to FalconX. In general, when as composability and privacy improves, on-chain credit becomes more viable for institutional capital and allows also a global coordination of capital allocation without requiring trusted intermediaries or manual reconciliation. So it's all about that, I would say. We cannot really live in a completely anonymous world. So yeah, that would be kind of like it would allow still to have a permissioned system with a more programmable and automated way of managing the credit lines.
Who do you guys see as the primary borrowers? From the credit side.
I mean, FalconX is a specific entity in its own right. I don't want to speak for the entirety of the DeFi ecosystem, but like we're an institutional only prime brokerage. And so, everyone from miners, treasuries, hedge funds, venture capital firms, our book of business actually crosses over quite a bit from traditional finance. It's probably, more than half, I would say, of people who are, they are a multi-strat hedge fund, top return 100 hedge fund who happens to have a sleeve of capital devoted to this market, rather than, a sort of fund or asset manager who came up specifically in the cryptocurrency world. And so, our lenders are generally, very large, very creditworthy. I loved all of the stuff, Matteo talked about. I dream of that future, but, we're regulated in a number of jurisdictions all over the world. And so our credit underwriting has to be very diligent. It has to be very specific. It resembles a lot of the traditional, financial models from a risk perspective that you would normally see. But we do leverage on-chain information, especially when we're talking about token collateral, looking at wallets, things of that nature. And we use a lot of AI technology. I don't know if everyone's sort of caught all of our announcements on the AI side with our product Focal that we launched, but we leverage that tool and others really heavily to do the credit underwriting. So from our borrowers' perspective, it's a nice mixture of both worlds. But it's institutional, sort of large trading firms, miners, venture capital, treasuries, and we're mixing and matching sort of the things that they're looking for from a demand side on the traditional financial market. So some people are just hedging exposure. If you're a miner, you're sort of naturally long Bitcoin, and you may have a need to sort of hedge that off because you have cash payments that you have to make for facilities and electricity and things of that nature, or you need financing to buy that new, all of those new miners. And on the trading side, obviously, we have a lot of borrower demand, sort of market dependent, what their strategies are for deployment. But more of what you would expect, margin trading, basis trading, cash and carry trade, or a lot of long, short sort of financing opportunities where we're using the financing component to shorter position. We're also a really large ETF player. It shouldn't be sort of understated how much overnight financing actually goes into traditional finance that people never see. Ultimately, at the end of the day, somebody has to be the provider of that overnight financing. And I think that the size of that market goes greatly underappreciated. When you see that, some ETF printed $20 billion of liquidity in a day or on their first print or whatever, somebody financed that overnight. Right, like somebody actually bought that Bitcoin and then didn't make delivery till tomorrow, but had to make the cash delivery on the front side. So there's a lot of hidden components of credit and financing across the industry that FalconX facilitates.
Yeah, those are great points, and like you said, most people don't see that happening on the back end at all. What do you see from a current market demand perspective? Obviously, there's been a lot of nuances in the markets these days. But 2025 going forward, what are you seeing in real time? I guess for both of you, just with who's looking to kind of borrow or lend in this space. It says traditionally, not a lot of banks are lending these days, right? So I would imagine it's a great opportunity for you both from what we have going forward.
All markets are cyclical. We've seen a little bit of a divergence from the broader global macro landscape. And that's been, obviously a positive for the industry and a positive for FalconX in many ways. And as opportunities, persist, you see a lot of strategies or a lot of managers rotate in and out of strategies, and so the demands on the financing side change. Last quarter, or maybe in the Q4, there was a huge amount of demand for financing, long positions where people had a perspective on what was going to happen in the market. Based on the new administration in the U.S. and things that were developing overseas, basis trading opportunities. As you sort of rotate into Q1, we see a lot of opportunities to refinance as rates are coming down across the board. As activity is sort of slowed in other strategies, they're rotating into yield in order to continue to sort of generate profits on their books. And that dovetailed nicely with a lot of miners who are looking to refinance, or a lot of funds that might be looking for a bridge loan for redemptions and things of that nature. And so the demand stays pretty static. The strategies for how people are deploying it, sort of shift from one to the next. But on the sort of lending side, I mean, ultimately at the end of the day, what we're providing is a fully, sort of collateralized, securitized product with yields that are very appealing given that risk profile. And FalconX has a long track record of providing financing in this space. And we can point to the performance of our book over a long period of time now. And given our historical sort of performance, this is a very, very attractive instrument given the risk profile. And so we're seeing a lot of demand, both from traditional finance and our crypto native clients on the lending side. As we see the borrowing side sort of cycle from one strategy to another, we can keep the book sort of balanced.
Yeah, absolutely. What are you guys most excited about going forward? Obviously, there's a lot of things happening. This is amazing from what I kind of talked about from the structured credit facility process, changing in real time, more efficient, more people looking to borrow and lend. What are you guys excited about as we move forward?
On our side, on the, I would say, more technological perspective, as Bob said, yeah, there's a strong demand on the borrowing side, especially on the prime brokerage activities that FalconX is doing, and that's definitely like the foundation and the foundational level layer for the credit infrastructure that we are building. Going to looking ahead, I would say we want to have credit, on-chain credit unlocking the ability to fund also other economic activities in the world, in the sense that like I'm thinking about either like starting from working capital for exchanges and trading desk, which is kind of also the speciality from FalconX, to expansion capital for corporations, for example, or recurring liquidity for fintechs and Web3 companies. So like this allows us also to expand the kind of borrowers, the range of borrowers that we are working with on-chain credit markets, which also allow to be less correlated with market cycles and would allow to have more sustainable, credit infrastructure in the future. So one of the things that we are excited to see in the next years coming in are to onboard more like, institutional and corporate borrowers in order to expand this kind of borrowers range and the credit profile range for the credit ecosystem. So expanding both supply and demand sides of these kind of credit marketplace pretty much. And then integrating with more technology like DK, zero knowledge technology, to allow borrower to prove their creditworthiness in a sort of like kind of plug and play way, in the sense that they can just like plug in their own the credit score from traditional credit bureaus or financial data or bank accounts that prove their creditworthiness, or prove or make also the covenant monitoring automated from an on-chain perspective by pulling data that is even off-chain, using still privacy preserving technologies. So this is also something that we see in the future should be developed more and can allow more growth in the space. And lastly, I would say also the kind of intersection with financial primitives that we have in DeFi, like stablecoins or yield-bearing stablecoins, with the broader credit ecosystem. So being able to securitize a basket of credit lines with yield-bearing stablecoins to allow more streamlined access also for capital allocators, which is actually something that we do have at Pareto with USD, which is this kind of yield-bearing stablecoin backed by a basket of credit lines. So looking ahead, I think these kind of trends and developments are definitely paramount for the growth of the credit ecosystem in general.
Amazing. Bob, how about you?
I've learned my lesson over time not to like make too many predictions and get too excited about things, because you're constantly surprised and then you look foolish. But what I'm excited about, I don't think it can be sort of removed from the broader picture here. So I'm really excited about this partnership. I'm really excited about us bringing this, sort of new asset class of securitized products and structured finance on chain. I think this is, we've talked about the size and scale of the market and the opportunity, and what that type of liquidity could do for the rest of the ecosystem. I think that's a smaller part of the story of like what I'm excited about when we look at the broader ecosystem, the broader story. The regulatory progress we've made here in the U.S. and around the world, and then you start to look at the broader ecosystem. There are always some headwinds, but generally the market looks good from a macro perspective in the long term, the short to medium term. Who knows what happens tomorrow geopolitically or from a rate environment, but you start to think about what is really escape velocity for an ecosystem, for an industry such as ourselves. You want good liquidity, and that's paramount to success. You want a strong regulatory environment, at least one that's predictable, where you know what the rules are and you know what to anticipate, and you're not going to be surprised by anything. strong demand, good performing economy. I think we've seen some hiccups there, but I think, medium to long term looks good. It's only a few times in our careers probably where you get all 4 or 5 of these things aligned at the same time. So I'm really hopeful and excited. Again, I don't make predictions because everybody will look foolish eventually. They keep doing that. But you think about where we were 3, 4, 5 years ago, almost 10 years ago now when I started my career to where we are today, my career in crypto at least. This is an exciting time. I don't think I've ever been as positive in the medium term as I have been on the industry right now. And I'm excited by that. And that ultimately just unlocks a lot of the things we're talking about. It unlocks the doors for a lot of the institutional players in the space in traditional finance to rush in, fill a lot of needs.
Yeah. Yeah, I love it. I feel like even, last couple months, just like the price impact just hasn't phased anybody. I feel like we're kind of, we've been through enough cycles, even on kind of the more institutional side where people are just getting more and more comfortable with it.
Yeah. Are we getting comfortable with it or just getting used to we're like 5% volatility? We're like,
used to it might be the better.
It's just a Tuesday.
Yeah, very true.
Getting used to it. Yeah.
I've the ups and downs long enough, and you get comfortable with your systems. Like I'm confident in my risk systems, right? And so I know that a small fluctuation is not going to create a big tidal wave of things. And those of us who are still here, who've been around, survived all of these cycles and all of these ups and downs, I think that's just a testament to doing things the right way and having a long-term perspective, and so we don't feel the volatility as much.
Let's talk about how you guys connected. Like how did FalconX and Pareto get connected, and how'd you guys see like kind of the synergies between yourselves?
Yeah, well, in terms of the connection, it came actually from one of the credit curators that are working on our platform, on our protocol, which is Maven 11 Credit, which is kind of like the glue and the connection between us and FalconX. The way that the credit lines work at Pareto is essentially that there is this role of credit curator that takes care of the onboarding for the borrower, reporting to the lenders. Essentially, it's a representative, the single representative of the lenders. So we were connected since long time with Maven 11. They brought up this kind of idea of bringing PB, prime brokerage activities, and create these kind of credit lines towards prime brokerage activities on chain. And it was like already like immediately clicking to us and seeing that there was a great fit with what we were building. So that's pretty much like how we connected. And then we really got to know the FalconX team in order to like structure this facility as we mentioned, in order to adapt to the on-chain logic, to the off-chain world, let's say the legal side of things. So then we really got like connected with the entire FalconX team in order to work on this and improve also this kind of credit facility over, I would say, the last 6 months. Or even more, I would say.
Yeah, probably longer. Matteo doesn't know this story, so it might be a little bit of a shock to him. So when we started thinking about like how do we we have this gap. There's no sort of structured credit in our space. There's no access to some of the credit tools that we would have in traditional finance. Right, it just doesn't exist in our space, and so we're brainstorming things that might work. The sort of asset-backed securities and structured credit came up. And I honestly, I told the capital markets team, I was like, good luck, like look into it, but I don't think it can be done. Like it's not going to work, right? There's no infrastructure for this. I think it's a beautiful concept and idea, but I don't see it happening. And so I wasn't maybe I'm just a natural skeptic, as we were talking about, all of the trials and tribulations in our careers in digital assets. But then they came back and they said, hey, we had this really interesting conversation with Pareto, and they're sort of trying to do some of the things that we talked about on chain. And that was the first time where I was like, oh, like maybe we can actually do this, right? And then you start thinking about like what it takes to get there. And I met Matteo during this process, especially as we started to be like, well, here's how complex these legal documents are. Like, here are the covenants and the representations, and somehow we have to find a way to enforce all of these on chain. And to their credit, their team was always like, yeah, I think we can do that, right? And it was like, you kept throwing all of these hurdles at them, like, well, no, like, but what about this thing? Like, yeah, I think we could do that. Let us get back to you. And so, yeah, it was, the right place, right time. I think sometimes those things work out in careers. A number of people see the world in the same way and start trying to solve really hard problems. And quite frankly, that's what gets us up in the morning. Like, that's what keeps me going, gives me the energy. So it was, like I said, I'd never told Matteo that story, but I was the internal skeptic on the project, in the very early days.
Nice.
Someone's got to play devil's advocate.
Yeah,
I love
Exactly.
great goal.
Awesome. Well, I think this is a good spot to wrap up. Matteo, Bob, really appreciate you guys taking the time. Let's start with you, Matteo. Where could people go to connect with you and learn more about
Absolutely. So definitely go to pareto.credit website. You can find all the information about the credit lines that we currently have and all the, documentation and technical details around it and how it works. Otherwise, follow us on Twitter, which is our main, communication channel where you can see all the latest news, and also you will find all the links to connect with the core team at Pareto. So I would say Twitter and the main website are the main channels that we can use in order to connect with credit managers, borrowers, institutional LPs that are looking to build in this space, and we definitely love to speak with them.
Awesome. And Bob?
All of the traditional places that you find people nowadays, you can find FalconX on LinkedIn and Twitter. We put out a lot of content. We have a weekly newsletter, market research and market color from our sales and trading teams who are sitting on the desk and, sort of dealing it, seeing it, doing it every day. You can find us at falconx.io if you want to see more information on our products, our service offerings. Get in contact with somebody who would be more than happy to walk you through everything we can do for you or your fund.
This has been great, guys. We'll make sure to include all that in the show notes. Great, it's been a great conversation.